While you are panicking about the April 2026 market crash, the 1% are quietly activating a 97-year-old wealth machine. Look around you right now. Look at the headlines screaming across your screens. Inflation is choking the middle class. Layoffs are sweeping through massive corporations, and the financial media is practically begging you to be terrified. They want you to believe that the sky is falling, that your retirement accounts are evaporating, and that the only safe move is to sell everything and run for cover. But let me tell you a secret, that Wall Street spends billions of dollars trying to hide from you, while the masses are dumping their portfolios at a massive loss. Behind the heavy mahogany doors of private banks, the global elite are not panicking. They are pouring champagne. They are celebrating because the moment they have been patiently waiting for has finally arrived. You see, you have been fed a massive lie about how wealth is actually built. Your financial advisors, your teachers, and those smiling experts on television all told you about the magic of compound interest. They told you to invest a little bit every month, wait 40 years, and hope for a modest 8% return. They sold you a pacifist version of compounding, a slow, boring tool meant for times of economic peace. But that is a carefully constructed illusion. True wealth, generational, untouchable wealth, is never built during a bull market. The elite know that compound interest is not a gentle snowball rolling down a sunny hill. It is a financial weapon of mass creation, a machine specifically engineered to devour assets during times of maximum economic bloodshed. And right now, in April 2026, as the world drowns in financial fear, that exact machine has just been turned on.
Educational and historical content only, not financial advice.
To understand the trap that is closing around the middle class right now, you first have to understand the great lie of the bull market. For the last decade, you were conditioned to buy at the absolute top. When the charts were glowing green, when tech stocks were breaking all-time records, and when everyone around you was bragging about making easy money. That was exactly when the media told you to pour your hard-earned savings into the market. You were promised that if you just kept buying, compound interest would eventually do the heavy lifting and make you a millionaire. But here is the brutal, unspoken reality of Wall Street. Compounding during an economic boom is a mathematical trap designed to keep you poor. Think about it. When everything is highly expensive, your money loses its buying power. Every single dollar you invest buys you fewer shares, less equity, and a much smaller piece of the pie. The snowball you are trying to build is being pushed across a flat, dry surface. It takes years, sometimes decades, just to generate any meaningful momentum. You are playing a game where the rules are quietly stacked against you. So who actually benefits from this system? The answer is terrifyingly simple. The 99% of regular investors are essentially acting as the exit liquidity for the 1%. The global financial machine desperately needs you to be endlessly optimistic when assets are dangerously overpriced. They need you to blindly throw your paycheck into index funds, real estate, and retirement accounts at the very peak of the cycle. Why? Because the elite needs someone to buy their assets when they are ready to cash out. They weaponize your optimism. They use your greed and your blind faith in the traditional compounding model to unload their expensive portfolios right before the inevitable collapse. When the music finally stops, exactly like it has right now in April 2026, the trap snaps shut with ruthless efficiency. The middle class is left holding a bag of overpriced assets that are suddenly plunging in value. The compounding effect that was supposed to secure your future suddenly goes into terrifying reverse, wiping out years of hard work in a matter of weeks. Make no mistake, this is not a glitch in the system. It is not an accident. It is a perfectly executed, meticulously planned transfer of wealth. The bull market is simply a harvesting season for the elite, a time to gather the trillions of dollars in cash they need for what comes next. Because what comes next, the crash, the panic, the blood in the streets, that is the only environment where the true masters of money go to work. Let us travel back to a time that looks suspiciously like our present. October 1929, Black Tuesday. The American economy is in an absolute freefall. The stock market is collapsing, wiping out fortunes in a matter of hours. Regular investors, utterly destroyed by margin calls and crippling debt, are losing their minds. The streets of New York are flooded with absolute despair. But if you look closely through the smoke and the chaos, what was John D. Rockefeller doing? What were the Rothschilds doing? They were not panicking. They were not screaming at their brokers to sell. They were executing a ruthless, predetermined strategy that I call the Bear Market Multiplier. The Rothschild family famously operated on a chilling principle: buy when there is blood in the streets, even if the blood is your own. And in the dark winter of 1929, there was a lot of blood. While the public viewed the crash as an apocalypse, the elite viewed it as a massive, once-in-a-lifetime liquidation sale. But they were not just blindly throwing money at cheap stocks, hoping the prices would eventually bounce back. That is the mindset of a gambler, and the 1% do not gamble. They focus entirely on cash flow. They buy pristine, untouchable assets that generate reliable dividends. Cold, hard cash paid out every single quarter, completely independent of whatever the stock price says on a screen. And this is where we uncover the true violence of the Rockefeller Protocol, a concept known as yield on cost. Let me explain how this mathematical anomaly works. Imagine a powerful money-printing corporation that normally trades at $100 a share, paying a reliable $5 dividend. In a booming market, that is a standard 5% return. But during a crash, when terrified amateurs are dumping their portfolios at any price just to escape the pain, the share price of that exact same company might plunge to $50 or even $25. The underlying business has not changed. People still buy their products. The company is still generating massive profits, and they are still paying out that exact same $5 dividend. But now, because the Rockefeller Protocol dictates buying during maximum panic, the elite step in. They buy those shares for $25. Suddenly, their effective dividend yield on cost is not 5% anymore. It has skyrocketed to an astronomical 20%. But the genius of this strategy is what happens next. They do not spend that cash. They do not buy mansions or yachts with it. They take that massive stream of dividend income and they ruthlessly reinvest it right back into the bleeding market. Because the share prices are still artificially crushed by fear, every single dollar of that dividend buys drastically more shares than it ever could have during a bull market. Those newly acquired, deeply discounted shares immediately start producing their own dividends, which are then used to buy even more cheap shares. The compounding machine does not just slowly tick upward, it accelerates, it goes exponential. It becomes a financial black hole, aggressively swallowing up the assets that the panicked middle class is throwing away. This is not investing. This is a calculated mathematical conquest of the markets. To fully grasp the magnitude of what is happening right now, we must strip away the emotion and look purely at the cold, hard mathematics of wealth transfer. The financial elite operate on a mathematical certainty, a formula known in absolute secrecy as the 2-3-5 rule. This is the exact algorithm that dictates how money flows out of the hands of the panicked middle class and directly into the vaults of the patient 1% during an economic collapse. Let us break down the brutal logic of this equation. Phase 2 represents the immediate doubling of your purchasing power. Imagine a scenario where a brutal market crash wipes out 50% of a stock's perceived value. To the amateur investor, this is a life-altering catastrophe. But let us run those numbers through the protocol. When asset prices are violently cut in half, the effective yield on your cash flow automatically doubles. You are suddenly buying the exact same underlying earnings power, the same real estate, the same corporate machinery at a massive generational discount. Then comes phase 3, the acceleration phase. Because you are reinvesting that doubled yield back into a completely collapsed market, the speed at which you accumulate new shares accelerates by 3 times compared to a normal, healthy economy. Think about it. During times of economic prosperity, your reinvested dividends only buy you a few extra shares here and there because everything is so expensive. But in the deep, dark trenches of a severe recession, those exact same dividends are buying massive blocks of ownership. You are systematically hoarding the underlying assets of the global economy, while everyone else is liquidating them just to survive. This creates a phenomenon known as the Dividend Black Hole. It is an infinite, unbreakable loop of wealth accumulation that feeds entirely on the panic of the masses. The price drops, so you buy the asset for pennies. That asset pays you a dividend. You take that cold, hard cash and immediately use it to buy even more deeply discounted assets, which in turn pay you even more dividends. The cycle repeats, spinning faster and faster, sucking up more and more equity from the market with absolutely zero extra effort on your part. You are no longer hoping for prices to go up. You actually want prices to stay low for as long as possible, so your black hole can consume more cheap shares. Finally, the trap springs shut with Phase 5. When the panic eventually subsides, and history guarantees that it always subsides, the market begins its inevitable, slow recovery. But your portfolio does not just recover. Because you spent the entire crash aggressively hoarding shares inside that black hole, your net worth does not just bounce back to its original starting line. It explodes. Historically, portfolios structured through this specific bear market multiplier see a wealth expansion of 5 times their original trajectory when the new bull market finally begins. While the middle class will spend the next 10 years simply trying to break even and recover what they lost, the 1% have already multiplied their empires. Funded entirely by the fear of those who sold at the bottom. Snap back to the present moment. We are standing right in the middle of April 2026. The market is bleeding, the headlines are terrifying, and the air is thick with financial desperation. History is not just repeating itself. It is playing out line by line, flawlessly executing the exact same wealth transfer matrix that has enriched the elite for centuries. But this time, there is a sinister twist. You are the fuel. Ask yourself a very simple question. Why is the mainstream media constantly bombarding you with fear? Why does every single notification on your phone scream about the impending collapse of the global economy? They tell you they are doing it to protect you. They claim they are warning you so you can save whatever money you have left. That is the ultimate psychological manipulation. The media is not your friend. They are the marketing department for the 1%. The elite know that the dividend black hole, their massive compounding machine, requires a constant, massive supply of deeply discounted assets to function. And where do those cheap assets come from? They come directly from the trembling hands of the panicked middle class. The billionaires need you to be terrified. They need you to log into your brokerage account, look at the red numbers, feel a knot in your stomach, and hit the sell button. Because the exact millisecond you sell your shares at a massive loss out of pure terror, a private trust fund algorithm buys those exact same shares at a monumental discount. If you give in to the fear, you are not just losing your money. You are literally working as an unpaid employee, building the generational wealth of someone who is already a billionaire. You are feeding their machine. So, how do you break out of this matrix? What is the escape plan if you are sitting there right now, staring at the screen, starting from absolute $0? You must become completely dead inside to the panic. You must execute the Rockefeller protocol with the cold, ruthless precision of a machine. You do not need $1 million to start the bear market multiplier. You only need the correct mindset and a complete disregard for the noise. Step 1 is sensory deprivation. Turn off the news. Delete the financial apps that send you panic alerts. Cut the psychological strings they are using to control your emotions. Step 2 is identifying the prey. While everyone else is speculating on highly risky tech trends or phantom currencies, you must hunt for the boring, unglamorous cash flow machines. Look for the massive foundational corporations that sell things human beings literally cannot survive without. Energy, water, basic consumer staples. The companies that have survived every single recession, depression, and world war and have never missed a dividend payment. Right now, because of the blind panic of April 2026, these boring giants are trading for pennies on the dollar. Step 3 is relentless execution. Every time you get paid, every time you have extra cash, you blindly buy these cash-flowing assets. You do not check the stock price the next day. You do not care if the market drops another 10% next week. If it drops, you smile, because your yield on cost just went up. You take every single dividend check you receive, and you violently force it back into the market to buy more shares. You build your own black hole, dollar by dollar, share by share. You stop reacting like prey, and you start accumulating like a predator. Wealth is never destroyed. It merely changes hands. The trillions of dollars seemingly vanishing from the markets in April 2026 are not disappearing into thin air. They are flowing like a river of capital away from the terrified masses and straight into the heavily fortified accounts of those who understand the bear market multiplier. 5 years from now, you will look back at this exact moment in history. April 2026 will not be remembered as a tragedy. It will be remembered as the great dividing line, the permanent boundary between those who secured generational freedom and those who volunteered to be lifelong wage slaves. The choice of which side of that line you stand on is entirely yours. If you want to stop thinking like prey and start building wealth like the 1%, make sure to subscribe to Mindset for Wealth. Hit the bell notification right now so you never miss another survival blueprint or hidden financial secret from history. The elite rely on your ignorance to build their empires. It is time to wake up. Thank you for watching, and stay resilient.